bull. And I can't find the, whatever it is, down here. But you want to get the joke, get the umbrella over the camera, please. Okay. Anyway. Hello, everybody. Welcome, people with a business itch, also known as the Biz Niches. This is our chief podcast, and we're airing live from New York City in front of the New York Stock Exchange. Today we have an intern scribe, Maya. Just one second. Hello, Maya. How are you?
I'm good. How
Excellent.
are you?
We're good, thanks. Maya is helping James out today because he's back in Calgary. Anyway, back to me. People with a business itch. Today we're airing in front of the New York Stock Exchange. We have the federal, what is that? We got some, the Treasury of New York down here. We got a whole bunch of very high buildings. Really quite interesting. Elevators all over the place. Take a few seconds for the sights and sounds of New York City. All right, that's great. Now back to something very, very important and near and dear to our hearts is making everybody financially happy, financially sound, our average Canadian. You know what? That's a really important thing, okay? So today, just like I said, we're in front of here. What happens at the New York Stock Exchange? Well, a lot of stocks trade, okay? One of the things that's gonna build your wealth is having a portfolio of stocks. One of the things that's going to hurt your portfolio is basically acting on everybody's stock tip. Dumb idea. Nobody wants to do that. We're going to talk a little bit about picking stocks. Okay? When you pick stocks, essentially you're picking a company. Okay? You're picking a company, and I apologize about the umbrella, by the way. It's raining cats and dogs out here. Okay? Not bulls, but we'll see the bull later on. Anyway, when you're picking a stock, you're picking a company. What are you picking? You're picking a company that's going to give you future dividends. Dividends are after-tax profits. You know, everybody wants to be a business owner. Everybody wants to be a business owner so they can make profits, right? Oh, we've got some people in the background. Don't worry. They're all allowed here. We're all allowed to be partaking in our podcast, and hopefully they become subscribers to our YouTube channel. Anyway, where were we? You're picking a portfolio of stocks. You're picking a portfolio of companies is essentially what you're doing. And what you're doing is just like any business, you want profits. So you're picking a company that you think is going to have profits. You're not picking an idea per se. You're picking a company that looks at it and says, hey, you know what? A year down the road, 2 years down the road, 3 years down the road, this company is going to make some good profits, and essentially they're going to give me a dividend after that profit or from that profit. Okay? What are we looking for? When we look for profits, we also look for companies that have cash flow. Good, positive cash flow, good earnings, okay? We don't pick companies that have, EPS, that's earnings per share to the average human, not these El Duce stock people. Earnings per share, that's how much earnings a company is going to make per share. Some of the things that you'll probably be highlighted, some of the things you're going to look for, just like we talked about last time, the earnings before interest, taxes, depreciation, and amortization, a really, really good indicator of how a company is doing from its actual cash flow. Net income, you add back non-cash deductions, that's a really, really awesome thing to look at. Pick companies that have tried, tested, and true. Lots of sales, lots of good profits from there. We can basically, comprise of a good portfolio. We don't just pick, my uncle's, Bob's, son's, brother's, sister's, dog's, monkey told me to pick this stock. Not a good idea. You haven't done any research on it. Not good at all. Okay, what else should we be talking about? And the other thing we should think about is we don't buy stocks timing of the market. You always hear people say we should time the market. Trade professionals, people that have been trading stocks for years and years and years, are not necessarily perfect at timing the market. For the average citizen like you and I, you don't time the market. Just buy good companies. Buy companies that you want to see in your portfolio for a long time. If they screw up in that period, fine, we can sell them. If they have crazy profits, we can take some of the profit off the table, but we're not necessarily buying companies for timing the market. We're buying companies and we're buying shares in these companies for long-term strategies. What's happening in the markets today? Follow us. Look at that. So as the day progresses, we notice that they have all the stocks in the companies, and you notice some of them are up in the green, some of them are down in the red. By the way, that's the reason why all finance people hate the color red. Look, that's why we hate red. Anybody that makes fun of me on why I hate the color red, why I don't own anything red, that's the reason. Green, if I could have a wardrobe of black and green, that would be all I would wear every single day. Red, you're not a true finance person. But if you notice, some of these stocks are going to go up and down throughout the day. Well, really, it's a question of supply and demand. Okay? How many people are basically saying, it's kind of like an auction market around here. So people are saying, it's like, hey, I want to sell my shares of IBM. They're trading now at $146.16. So you'll have what's called a bid and an ask. A bid is somebody basically saying, it's like, hey, I'll buy your share for, I don't know, $146.10. And then you have the ask. Okay? The ask is like, well, I'll sell it to you, or whatever it is. I'll sell it to you for $146.20. Okay? So essentially you have the whole auction market is all these bid and asks. And basically wherever they meet together, that's when the sale happens. And the last sale is what you're seeing. So for example, we see Visa right now. Visa's up $1 today, $141.03. Fantastic. Walmart down 63 cents. The reason why we're talking today about stocks is because we're here to help the average common Canadian build a stock portfolio. A stock portfolio helps you in your future earnings and helps you gain some of that nest egg that you can use in the future, whether it's for retirement, whether it's for that emergency fund, or whatever it might be. Okay. A great way to build your portfolio is through stocks, but the most important way to build your portfolio through stocks, average Canadian person, is not by listening to the Eldouches that have those $6,000 suits. Sometimes it's just as simple as picking a company with good future cash flows. That's all it comes down to. A good business, good future cash flows. You know, we talked last week about the earnings before interest, taxes, depreciation, and amortization. What does that really come down to? Is there profit from the company to the average person? That's all it comes down to. You're going to hear about these $28,000 suits and stuff like that. Nonsense. You don't need to. Trust me, I've learned a lot of this stuff. I've studied it. It really comes down to something as simple as, are you picking companies with good profit, good earnings before interest, taxes, depreciation, and amortization, that they can take some of that money and give it back to you, my fellow business people with itches, also known as biz niches.